What if I told you that you could earn passive income every quarter just by owning a piece of Singapore's most iconic shopping malls? No tenants to manage, no repairs to fix, just regular dividend payments hitting your account. That's exactly what thousands of Singaporeans are doing right now with Frasers Centrepoint Trust. But here's the million-dollar question. Is it actually worth your money in 2025? Today we're doing a deep dive into FCTSI numbers, the risks, and whether this REIT can actually help you build real wealth. Why FCT matters right now. Before we go any deeper, let's be clear about what makes Frasers Centrepoint Trust special for dividend investors like you. FCT owns some of Singapore's most valuable real estate. We're talking about Causeway Point, Centrepoint, Parkway Parade properties that have been generating rental income for decades. These aren't speculative assets. They're cash-generating machines with long-term tenant contracts. Here's the real value proposition. When you buy a unit in FCT, you're essentially buying a share of these properties. And by law, FCT must distribute at least 90% of its taxable income to unit holders. That means the majority of the rental money collected gets paid directly to you as dividends. Compare that to most stocks where you wait years hoping the company will increase earnings and the price goes up. With REITs, you get paid now while you wait. That's the fundamental advantage for wealth building through dividend investing. The Frasers Centrepoint Trust dividend has been relatively consistent over the years. While it fluctuates based on performance, the trust has maintained distributions even through challenging periods. For a beginner investor, that consistency matters. It means you can actually predict your income stream. What is Frasers Centrepoint Trust? So let's back up for those unfamiliar. What exactly is FCT? Frasers Centrepoint Trust is Singapore's largest retail REIT. A REIT real estate investment trust is basically a company that owns properties and gets paid rent from tenants. Instead of hoarding that money, REITs distribute it to shareholders. FCT operates across Singapore with a portfolio of retail shopping malls and properties. Think of it as owning multiple shopping centers without having to manage the day-to-day operations, deal with tenants, or handle maintenance. Professional managers do all that work while you collect the dividends. It's listed on the Singapore Exchange and is one of the most traded REITs on the market. That liquidity is important because it means you can buy or sell your units relatively easily. The dividend story. Now let's get to the heart of why people invest in FCT, the dividends. The Frasers Centrepoint Trust dividend yield has been attractive for income-seeking investors. The exact yield changes based on unit price, but historically it's offered returns that beat bank interest rates by a significant margin. What's crucial to understand is the sustainability of these dividends. CT's distributions come from actual cash flows rental income from tenants in its properties. This isn't profit from selling something or accounting tricks. It's real money collected from tenants every month. The trust typically pays distributions quarterly, so you get 4 payments per year. Many investors reinvest these dividends, which compounds your returns over time. That's how real wealth building happens. Over the years, FCT has maintained its dividend commitments even when retail faced headwinds. During COVID, when many businesses struggled, FCT managed to keep distributions flowing. It tells you something about the quality and resilience of the portfolio. The portfolio and performance. What exactly does FCT own that justifies this income stream? The portfolio includes prime retail locations with strong tenant bases. Causeway Point and Centrepoint are iconic properties with deep foot traffic. Parkway Parade serves a thriving residential area. These aren't marginal assets. They're strategic locations that will remain valuable. The retail sector has faced real challenges from e-commerce and changing consumer habits. FCT isn't immune to that. Here's what's important. The trust has adapted. They're focusing on experiential retail, food and beverage, and services that can't be bought online. You can't get a haircut or eat dim sum through a website. Looking at 2025, the outlook is stabilizing. Consumer spending in Singapore remains healthy. Tourism is recovering, which boosts retail traffic. Rental rates have stabilized, and FCT's properties are well positioned in the market. The management team isn't sitting idle either. They're actively upgrading properties and attracting better tenants. The business is being run with an eye toward long-term value creation. Why beginners should consider FCT? If you're just starting your dividend investing journey, why is FCT worth your attention? First, it's simple. You don't need to analyze dozens of financial statements or predict earnings growth. You're buying a diversified portfolio of real properties managed by professionals. Less stress, more clarity about what you're investing in. Second, the income is real and predictable. Unlike dividends from some companies that might get cut unexpectedly, FCT's distributions are backed by lease agreements and steady rental cash flows. You can actually plan around this income. Third, stability matters when you're building wealth. FCT units don't swing wildly in price the way growth stocks do. The value is tied to real assets that retain their worth. For a beginner, this is far less nerve-wracking than watching your investment swing 20% in a month. Fourth, it's liquid. You can buy and sell on the Singapore exchange without any hassle. You're not locked into an illiquid investment. Fifth, professional management takes the burden off you. You don't have to be a real estate expert to invest in quality properties. The trust handles tenant selection, maintenance, capital allocation, everything. And finally, REITs are specifically designed for income investors. That's their entire purpose. You're not fighting the business model, you're working with it. It's the real risks you need to know, but we need to be honest about the challenges too. Retail is changing. Commerce continues to pressure physical retail spaces. Tenants have more bargaining power and foot traffic isn't guaranteed. FCT needs to keep adapting, and while they're doing a decent job, this headwind won't disappear. Interest rates affect REITs significantly. When rates rise, borrowing becomes more expensive, which can squeeze margins. Higher rates also make REITs less attractive compared to bonds, which can pressure valuations. This is something to monitor in the wider economy. Tenant concentration matters. If a major tenant goes bankrupt or leaves, it impacts rental income. FCT has a diversified tenant base, but concentration risk still exists. The retail sector is cyclical. There'll be good years and slower years based on economic conditions. Your distributions might fluctuate accordingly. Unit price volatility is real. Unit price can move around based on market sentiment and interest rate expectations. If you need to sell quickly, you might get less than you paid. However, if you're holding for dividends, this matters less. Finally, dividends aren't guaranteed. If rental income drops significantly due to economic downturn, distributions could be cut. It's happened to REITs before. The 2025 outlook: what should you expect from FCT in 2025 and beyond? The Singapore retail market is stabilizing after years of disruption. Consumer spending is holding up well. Tourism is picking up steam, which benefits retail tenants and foot traffic. FCT is well positioned in this environment. The properties are in good locations, the tenant base is solid, and management is proactive about adapting to market changes. Capital management has been disciplined. The trust isn't over-leveraged, which gives it flexibility and financial stability. For distributions, expect modest stability. Probably won't see explosive dividend growth, but you shouldn't see major cuts either. This is a mature business that generates steady cash flows. One thing to watch globally is interest rate movements. Economic policy will influence whether dividends stay stable or face pressure. Is FCT the best REIT for you? Here's the real answer. Frasers Centrepoint Trust is an excellent choice for beginner dividend investors, but best is subjective. FCT is ideal if you want stable dividend income, exposure to Singapore's retail sector, professional management, and low volatility. It's perfect for someone building wealth through consistent passive income. FCT might not be right if you're seeking aggressive growth, want exposure to different property types, or believe retail is fundamentally doomed. Some investors prefer diversifying across multiple REITs in different sectors. For beginners specifically, FCT's track record and stability make it a lower-risk entry point into REIT investing. You're not gambling on an unproven business model, you're buying proven assets with a history of paying dividends. How to start if you're convinced? Here's how to actually get started. Open a brokerage account with any SGX licensed broker. Most banks offer this. Verify your identity, set up your account, and you're ready to trade. Check the current unit price and dividend yield on financial websites. Don't just buy at any price. Understand what you're paying. Start small. Don't need to invest your entire amount at once. Buy a few units and get comfortable with the process. Dollar cost averaging by investing regularly is actually a smarter strategy for long-term wealth building. Set up automatic dividend reinvestment if your broker offers it. This compounds your returns over decades. Final thoughts: Building wealth through dividends is a long game. Frasers Centrepoint Trust can be a solid foundation for that journey. It's not exciting or flashy, but it's reliable. Every quarter, distributions hit your account. Every year, your wealth compounds slightly. The Frasers Centrepoint Trust Review for 2025 shows a trust adapting to modern challenges while maintaining its core value. Consistent income to unit holders from quality real assets. If you're serious about building wealth through dividend investing, FCT is absolutely worth considering. Just remember, do your own research, understand your risk tolerance, and think long-term. Thanks for watching. If this helped you, please hit that like button and subscribe for more dividend investing content. Drop a comment below if you're already an FCT or if you have questions. See you in the next video.